Welcome to our channel. Today, we're diving into the world of investment fraud. Investing can be scary. You're putting your money on the line hoping for a good return. But there are people out there who want to take advantage of unsuspecting investors. They promise you the world, guaranteed returns, insane growth. But it's all too good to be true. You need to know the red flags, the different types of scams, and how to protect yourself. So in this video, we're going to break down some of the most common investment frauds out there.
Let's start with one of the most infamous investment scams, Ponzi schemes. Ever heard of Bernie Madoff? He ran the biggest Ponzi scheme in history, defrauding investors of billions of dollars. Instead of investing your money in actual businesses or assets, the scammer uses it to pay off earlier investors. It's like a giant pyramid, where new money coming in is used to pay off the old investors, creating the illusion of high returns. But it's completely unsustainable. Eventually, the scheme collapses when they can't find enough new investors. Remember, if it sounds too good to be true, it probably is. Next up, we have pyramid schemes. These are often confused with Ponzi schemes, but there's a key difference. Pyramid schemes focus heavily on selling products or services, often overpriced and low quality. You make money, not from selling the actual product, but by recruiting more people under you. Just like Ponzi schemes, pyramid schemes are doomed to fail when the market becomes saturated.
Now let's talk about stock manipulation. It involves artificially inflating or deflating stock prices through illegal means. Methods include spreading false rumors, pump and dump schemes, and using bots to manipulate trading volume. The goal is to trick investors into buying or selling stocks at the wrong time so they can profit. If you see any suspicious activity in the stock market, report it to the Securities and Exchange Commission, SEC.
Have you ever gotten a call out of the blue promising incredible investment returns? That could be a boiler room scam. Scammers use high-pressure sales tactics, convincing you to invest in something worthless or non-existent. They often target vulnerable people, promising them the world, but it's all a lie. If someone is pressuring you to invest right now, hang up the phone.
This next one is all about phony investment opportunities. We're talking about fake real estate deals, cryptocurrency scams, and other shady investments that promise unrealistic returns. They might use fancy websites, testimonials, or even celebrity endorsements to lure you in. Always do your research. Check the background of the company and the people involved. If it sounds too good to be true, it probably is. Now, let's talk about hedge fund fraud. Hedge funds can be a breeding ground for fraud, with tactics like misrepresenting performance or cooking the books. They might charge exorbitant fees while delivering mediocre returns, or even worse, losing your money altogether. Just because something sounds exclusive or sophisticated doesn't mean it's legitimate. Do your due diligence. Let's talk about binary options fraud, a growing problem in online trading. Binary options are like digital bets. You predict whether an asset's price will go up or down within a specific time frame. Many binary options platforms are rigged against you, manipulating trading software to make it nearly impossible to win consistently. They might even refuse to pay out your winnings, leaving you with nothing but losses. Stick to regulated platforms, understand the risks involved, and remember that it's more like gambling than investing.
Cryptocurrency. It's the future of finance, right? Well, maybe. But it's also a huge target for scammers. With the rise of Bitcoin and other cryptocurrencies, we've seen a surge in cryptocurrency scams. They prey on people's fear of missing out, promising huge returns on confusing digital assets. Do your research, invest in projects you understand, and never send your crypto to someone you don't know and trust.
This last one is particularly insidious because it preys on people's trust within their own communities. Affinity fraud targets specific groups, like religious organizations, ethnic groups, or senior citizen communities. Scammers gain trust by pretending to be part of the group, exploiting that trust to promote fraudulent investments. They might use respected community leaders to vouch for them, making it even harder to spot the scam. Always be cautious and do your own research before investing. Thanks for watching. Remember to stay informed, vigilant, and cautious when investing. If you suspect any fraudulent activity, report it to the appropriate regulatory agencies or local authorities. Investing can be a great way to build wealth, but it's crucial to be aware of the risks involved. Don't let scammers take advantage of your hard-earned money. Don't forget to like, subscribe, and hit the notification bell for more informative content. Stay safe.